Hey, welcome back. Today, what Samsung's earnings beat means for the whole Korean market, a notable financial sector acquisition, and how strategists are thinking about positioning around a possible end to the Middle East conflict. Samsung Electronics reported first quarter operating profit of 57.2 trillion won, against analyst expectations of around 40.2 trillion won. That's a 42% beat, and the ripple effect on market forecasts was immediate. According to FinGuide, the consensus for total Kospi operating profit in 2026 jumped 15.5% in a single week, moving from around 651 trillion to 753.7 trillion won. The electronics sector consensus alone rose 26.6%. Second place was securities, up 3.79%. The gap tells you how concentrated this earnings story is. Samsung's full-year profit estimate is now 292.9 trillion won, up 44% from a week earlier. SK Hynix's estimate rose 7.4% to 180.3 trillion won. Together, those two companies make up 42.7% of Kospi market cap, but 62.8% of projected Kospi operating profit. That earnings to cap gap is why analysts argue valuations still have room. The Kospi forward PE is 7.43 times. The electronics sector sits at 5.71. Korean brokerages are projecting a year-end Kospi range of 5,401 to 7,315. The main cautionary note, flagged by LS Securities: Samsung's Q1 strength likely reflects contracts that repriced early, which could mean the pace of gains moderates in later quarters. On M&A, Meritz Financial Group and Hanwha Life have both made the shortlist for the acquisition of Akwon Capital, which also holds Akwon Savings Bank as a subsidiary. The seller is EQT Partners, a global private equity firm with a reported acquisition price of around 1 trillion won. For Meritz, which has no savings bank, this would open a deposit-taking channel to support its IB business. For Hanwha Life, it expands both capital and savings bank operations in one move. Due diligence is underway. Finally, on investment strategy. Baek Young-chan, research center head at Samsung Securities, laid out two scenarios. If the Middle East conflict ends by late April, he expects reconstruction-linked sectors: construction, power equipment, renewables, secondary batteries, chemicals, to lead markets in May and June, with post-war reconstruction demand estimated at 25 to 30 trillion won. Under that scenario, Kospi could reach 7,000 by year-end. If the conflict extends into May and June, inflation and supply chain pressure push the market lower. His tactical advice: short-term investors should reduce exposure. Longer horizon investors should use corrections for phased buying rather than concentrated positions. Separately, Korean companies are already moving. Naver is working with 4 international banks to raise approximately $1 billion in foreign currency bonds. Korea LH, Korea Exim Bank, and Hana Bank are also lining up foreign currency issuances, all looking to lock in funding before uncertainty potentially rises again. That's all for today's deep dive. We'll be back with more insights. You've been listening to the Korea Economy Brief, straight from the front page of Seoul Economic Daily. Thanks for tuning in.